Good morning, good afternoon, or good evening. I've got no idea what time you're watching this, but it is February 16th, 3 o'clock in the afternoon over there on the East Coast. It is 4 a.m. over here where I am Monday morning, and what I have for you on the screen there are two numbers 586 and 325. What those numbers represent are 586 days trading sessions since the last minus 20% correction on the SPX. Over here in this bottom right corner, 325, it is 325 trading sessions since the last minus 10% correction. And it's roughly 586 days since I've seen my doctor. And being that this week is an extremely slow week, although it is OPEX, this week we're no Fed, we've got no CPI reports, those are done, and earnings, having earnings already been completed, there is no NVIDIA this week. Next week is NVIDIA. So as far as this week goes, it's a complete fucking wash. Yes, there are names that are of interest to certain individuals. If these names are of interest to you individually, just let me know. I have every one of them already charted. Takes me only a couple of seconds to pull it up, make an update if needed, and give you my opinion as to what I see in front of me. But yeah, with that in mind, I am not going to be here on Friday. I will be through the early morning session till around the afternoon on Thursday, and I'm out. I'm going to go see my doctor. I've got an appointment set there on Friday at St. Luke's Medical, and he's actually been asking because he's been my doctor now for the better part of 9 years, and I tell you what, 9 years ago, which roughly around when I was doing this, I only met the gym about 12, 13 years ago. I was a fat bastard. And when I got in there, I did that. That's it. I'm going for it. And, 500-pound squats, those were a regular thing twice a week. In this gym in Makati that I used to work out in, the staircase was right there underneath us, and then there was a big glass wall right in front. So until I got comfortable, which was a couple of months after this, where I was doing 500-pound squats regularly without any spotter, without any belt, I needed a little bit of help. And, just a couple years ago before I moved out here, 500-pound deadlifts, 525, 535 pounds, these were regular. Every day. Not every day, but 3, 4 times a week I'd be doing them. And that's when you get into your danger zone, because as I need to check this off here, because Sunday for me is gone. 6 weeks out of the year of 2025 have now been deleted. They are gone. They will never, ever come back. We will be having 52 and 2 days because we started off on the Thursday. Started Thursday, Wednesday. I think we started on Wednesday, yeah, because this year started out with what the fuck. So anyway, check that out. Boom, boom. And again, I'm now 52. I'll be 53 this year. But having moved out to this property where I am only a year and a half ago, this is the most dangerous year in a man's life. And this week as well needs to be checked off, week number 3. This is the most dangerous year in a man's life, and it's the year when he, quote unquote, retires. And I tell you, I have, not only due to, logistical reasons because of where we're located, way out in the countryside. I didn't even have a gym, which we recently built back in around July, August last year, accessible to me, and I have gained an excessive amount of weight, and it's time to get to the doctor. It's time to get things fixed. But as you guys may have remembered when I've gone over this with you, this is, a little bit, and I'll share a clip at the end of this video from Jamie Dimon. This is why I'm hard on you people, because look, I'm the son of a fucking dishwasher who I now have found out that I'm not even an American citizen, because my father didn't become an American citizen until 1976, and my mother was on a green card until she got naturalized when I was a teenager. So, since both of my parents weren't citizens when I was born, I'm not a citizen according to the new immigration laws. But beyond that, meaning, this is the reason why I'm hard on you, and it's because everybody takes this lackadaisical approach of the insane ability to change your life with trading, where, okay, let's look here. The average lifespan for a man is 78. So let's get realistic and say that you only get to go to 70. And I'm at 52. That means I've got 18 years left, 6,570 days, which is not, because my birthday was in September. If I'm getting, which I don't, 8 hours of sleep, that's 4,400 gone. 120 days out of the year. 120 days out of every year. That leaves me with 2,168 days. I got 105,000 hours. I've got 4,401 days left, because I'll lose 2,168 days to sleep. You got 250 trading sessions in a year, man. 6.5 hours each day. You got 1,625 hours to trade. If you want to retire in 2 years, you got 3,250 hours to put into it. Fucking buckle up, man, because trust me when I tell you, the shit that you have been normalized into thinking is regular, it ain't. And I'll bring it to you here, all right? Because this week is OPEX. OPEX, go Google it. Don't fucking go ask people for questions. What's the answer to this? You got all the answers out there. I had to do this the other day for somebody who asked a question. I fucking Googled it and sent a screenshot of the fucking Google search. Oh, thank you. OPEX is options expiration. It refers to the date when options contracts expire, meaning the monthly contracts. These are the big boys. These are the hedge funds. Options expiration week is designed to destroy small accounts. When we get quad OPEX, which is every quarter, which will be next month, those weeks are designed to destroy even the big boys. So buckle up and suck it up, because this week, if you think is going to be normal, it ain't going to be normal, because the expectations that you have to take place within that 6.5 hour trading period, remove those expectations and look at your bigger, broader picture. It will help you out. But now, going back to last week, it was actually pretty stressful, because I was looking, as I sent out that pre-market video like I'm doing now, that we were looking for a drop. We were looking for a drop into the week. Everything looked great. We had 4 green weeks in a row. And unfortunately, minutes after I sent out that video, the tariff talk came out. And the tariff talk came out, and the market fucking tanked. And we were down 1%, 1.5%. And at the end of the day, like I tell y'all, it's when you're oversold, you're oversold. And that was our dip. Our dip took place already prior to the market even opening up, down below 6,000. And when we opened up there on February, what the fuck did we do? Boom, exactly what we were supposed to do. We went up plus 1%, and we closed green, plus 1% from the lows overnight. Tuesday, dead donkey. Green, And then you had your CPI report. And your CPI report, like you all have seen, you all have witnessed, we already saw it was going to be the big buy the dip because of where we were. And I sent out the pre-market alert. And you had not only 900% on your credit spread playing the bullish put credits on Wednesday, but looking in advance because you were going to get that plus 1% on Thursday. Those that took the trades on Wednesday for Thursday got their 900%, and those who even took the trade for the plus 1% on Thursday because of the gap down got 900%. So you literally had three 900% credit spread trades there on Wednesday and Thursday. If you took that effort and really wanted to get the fuck out of the life that you're living and start to be financially free, it was right there in front of your face, easier than stealing fucking candy from a baby. And then what happened? Well, on Friday, we got our red close. Yeah, we sure did, minus 0.44, but we got a fifth green week in a row. And that's where it's going to be significant when we go into the end of this. On the QQQ, I can get off of this. Again, same thing. 5 green weeks in a row, and these green weeks coming off of that 499, making it up here to 538.84. You don't need to be a rocket scientist and be able to figure out, mental calculations in your head that is hard. 499 plus 50 is, plus 10%. We're at 538.84, so we've made a 7.5% bounce. 25, 11, 945, and 11 points last week. Green, 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 green. 5 green weeks in a row. And then you get your secret little hint. And that was your IWM having a red week last week finally. Minus 1 point compared to the minus 0.23 there at the end of January. So you are getting a tiny, tiny little secret hint that, hey, guess what? Yeah, this thing has run its gauntlet, but there are much, much bigger signals that are out there. So anyway, looking back here at the email sent out there on Friday before I got kidnapped, yes, on Friday I was not present because my wife, actually giving a shit about my health conditions and the stress levels I've had, she took me out. It was maybe 3 hours before the market opened. It was about 6 o'clock at night over here. My wife just grabbed me and said, that's it, let's go. She took the modem out of the wall, took it, put it in her bag, said, let's go. And she took me over to a resort to spend the night over there on Valentine's Day because she did not want me sitting in front of a computer until 4 o'clock in the morning stressing out about somebody making $50 fucking dollars because they don't want to see the bigger, broader picture of everything. Anyway, on the email I sent you out there on Saturday or Friday, it was you learned all about the 60-75 border wall over the last 4 weeks. If you haven't learned, go on your chart, draw the fucking line, look at your spreadsheet, see what your 60-75 actually represents. Because what that brings me into is here. Buy the February 21 weekly 6120 calls, sell the February 21 weekly 6115 calls. You're going to get somewhere between $2.50 and $3 credit. If you can get better than $3 credit on this, you've really taken advantage and gotten yourself into a really nice spread for Friday, February 21. However, using that call wall, buy the February 21 weekly 6080 calls, sell the February 21 weekly 6075 calls. You're going to get somewhere between $4 and $4.50 credit. $4 credit, $100 risk, 400% potential profit. Close on Friday below 6075. Get $450. You're risking $50 on each contract. You're getting $450 credit. That's your 900% there. And both of these, both here and here, not only avoid your day trade issues, but they also have an abundance of credit within them. So if needing to roll the trade onward onto February 28th, onto March, whatever the fuck is the first Friday of March, March 6th, March 7th, I don't know what the date is. You have the ability within that credit that you can roll it over and just continue on with the trade with a tiny little bit less credit than what you got. So pretty much, yeah, for this week, because it is so slow, I don't need to spend more time on this, and I will bring you on. I can't believe we're into 15 minutes already. Here into the charts. So again, this is my detailed daily trading chart over here on the SPX, and for obvious reasons, it's very zoomed out. I'm zoomed out here onto the October 27, 2023 bottom, which was the last time you had a minus 10% correction. And here we are. Looking at this from a 30-day point of view, you can see here your big move up off of the deep seek, or was this deep seek? This is your January 13th bottom, your OPEX bottom. We'll get into that in a couple of minutes as well. Here is your big January 13th bottom at 57.73, and your big bounce up here into the all-time high, 61.2818. Ba-bang, ba-bang, ba-bang. A beautiful little ABC view, the deep seek gap down, the tariff gap down, and then here, again, we did have the tariff gap down on this Friday, but then we didn't get to open it there on Monday because, they had already bought it up. But what I'm showing you here, not only is we've been channeling in this zone here for the better part of a month, 20 days. And here we are right back up here to this failure zone up here in the 6100s. Oh my God, look at this. Unbelievable. From an Elliott wave point of view, and again, I'm trying to go with the lowest of low odds. The lowest of odds that we are going to go higher. Okay. We got our 1-2. Here is our A, 5 waves up for our wave 1. Here's our ABC for our wave 2. Almost a perfect C equals A. Right on down there to 6,003 last week. And here we are into our 1, 2, 3, almost picture perfect, right back up to that 61.2834. And now let's see if we get our 4, and our 4 holds up here above that 60.49 area. And then we get our wave 5 to the upside into that 61.80, 62.40 area, because that is the low odds, best play, bullish scenario looking to the upside. Bring you back before we go there. This is your 59.05, 58.43 gap. These are your post-FOMC gap from back here in September. This is your PPI gap from back here in August. Here is your jobless claims gap off of the big bottom, 51.1926 back in August. And then you have more gaps that are down below. And as you know, all gaps get filled, even the ugly ones. Valentine's Day proved that. But here we are in the S&P futures with the ES. And again, looking at this pennant channel that we were in, again, perfect, yeah. Thursday, broke up above that area, boom, and here Friday, as you can see, just kind of slowly weakening down. And again, looking for it to get back into that 6100, 6020 area, with the first failure being the S&P futures below 6100. And then, as the week progresses, seeing whether or not we get that retest of that 6020. It's a slow process. It's not a microwave. It's not anything else like that. But again, coming back here onto your full moons. Here was your full moon back here in December. Perfect top. Back in November, perfect top. Back here in October, perfect top. September, perfect bottom. August, perfect top. Back here in July, perfect top. Perfect bottom over here in January. And here we are into February. And again, my biased view is that this is a full moon top. I cannot say that the full moon is in place until we get into Wednesday, Thursday, Friday of this week, and maybe even into next week, where if we break above 60.28 Wednesday, Thursday, Friday, then it is not a full moon top. Then it is a full moon bottom. But that is not proven yet. And the same thing goes for the top. We cannot say that that is a top until we break down below 6,003, because that is your temporary full moon bottom. So again, this is a science. It's not it's an art. It's not a science, but it is damn well reliable. And then you come over onto your QQQ, and you see how your moves on your QQQ have been nothing but bullish. That's because QQQ is where everything is about. Like I shared with you guys earlier in the week, all NVIDIA. NVIDIA. And NVIDIA is what did all of your driving. But there again, I do give you a little bit of credence over there to Apple, because Apple did have a pretty beautiful, call it near 9% move off of Tuesday's low. Come over on your Elliott wave view onto the QQQ. And again, still sticking with the top being placed. Your A, big move over here into your January top. Your B, and here we have been just channeling around. And now we can see ourselves with a possible ABC, with C equals A up here at 50.42, which would be a new all-time high, or even up here into 544. Doesn't matter. It really doesn't matter, unless you're going to sit there and 0 DTE your QQQ on the put side. You got plenty of time, plenty of advantage to be going out there into April, as I have. If you want to condense it and go into March, by all means, feel free. Imad just got into June. As you know, elongate, he's in February 2026. Don't know what to do? Send me a message. Happy to give you guidance on it. Come over onto your Dow, and you're looking at your Dow since you had your big sell-off there on January 13th, and nothing. You have absolutely nothing. You did make it back up, but you have absolutely nothing going on over here on the Dow, because everything is inside the QQQ. And then you come over onto your IWM, and as you can see with your IWM, how it hated 230, and we shorted the hell out of 230 for weeks. Now it hates 227 again. So this 227, unfortunately, because we can't get a breakdown below 220 until the shoes come off, that's what we're looking at. So that's your broad picture as far as the market goes. And this is where it starts to get interesting. I'm not pulling this up because it's a tweet and, oh God, here's the new shit to go look at. No. Everybody knows about this, and I've been tracking this for a couple of years already. But now suddenly it's getting to everybody's attention that, because Doge is doing what it's doing, and it is having an effect, as you see there in the spread room. The housing market in the DC area is starting to collapse. The U.S. government claims it has almost 5,000 tons of gold, but Fort Knox U.S. Gold Reserve has not been audited since 1974, almost 50 years ago. No one has seen any of it. It's time for Elon and Doge to conduct a full audit of every single ounce of gold. It's our money. Again, this is a tweet, but this is a lot of stuff that people are talking about because, as you know, gold is what the dollar is backed by, and they changed those, regulations many, many, many years ago. So anyway, this is the dollar index. This is the, dollar sign DXY that you can watch over there on your Thinkorswim. And I have been tracking this for a very long period of time and looking for that breakout above 109. And that was what your trigger was for the market to really start selling off there at the end of January, or in the middle part of January, was when we got up above that 109. And you knew that you would get a retracement off that 109, and your S&P charts, NASDAQ as well, everything told you that you were going to get a bounce in the markets. And that's what you've gotten. You've gotten your small retracement over here on the dollar and your bounce over there on the S&P and the QQQ and whatever. And here we are at this big 107, 118. 107, 17.8. 107.18. Nice little dip down to the downside, but from a bigger, broader picture, you can see the breakout of the dollar. You can see the breakout of the dollar attempting to get ready to take place. And then you come over onto your 20-year on the TLT. And this thing is already breaking down well below that 2009, 2010 support level, 88.78. And this is again telling you that the stock market going up, it does not agree with it in any way, shape, or form. And that's what's happening with you over there on the bond market. But back here over on the gold, again, I bring you on here to just a couple of things to, really understand and get a look at. Because what you've had here of recent is this just massive surge of gold being requested from the Bank of England. Physical gold, very similar to what started happening prior to COVID taking place. And that was where I pointed out to you back there on beginning of the year, or beginning of the month, February, after we posted that, January review, where if you just did one contract, take our trades, one contract, you're up 1,000% for the month. I mentioned here, right there, February 2, COVID. And that's what I'm referring to. What I'm referring to is how we are engaging ourselves into a COVID-type top. And I got to share with you something from a paid service. Bullish, bullish, bullish. This is the beginning of their newsletter. The setup is firmly in place for a market decline that will be larger than any in the lifetime of modern day investors. The paragraph begins with the pattern of advance in the U.S. market in the major U.S. stock indexes is completely or nearly so, and valuation levels by many measures are more extreme than at any time in history. Take you down to, pattern of the rise is not complete. Talking about here the U.S. Treasury long bond yields progressing higher in an impulsive pattern in line with our forecasts for higher rates. And I've told many of you that we're looking at 6% interest later this year. Blah, 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 blah. The dollar index, the U.S. dollar index completed an upward correction at 110.176 on January 13th. The index is in the early stages of a decline that will eventually draw prices below par. Come back onto your physical gold again, and the way that you have been getting your surgence of everything running into that. I don't think I have anything over there, and I bring you back onto the charts. Your silver is in the same boat where it is getting ready to as well explode through 30. Coincidentally, how it closed at 29.31 is not a secret. But you're breaking out above 30, you get above that 33.31, and then you're starting to progress and you're starting to push. And silver, this is where Trump comes in, because and what's happening in gold, what's happening in the dollar, the bond market, in everybody getting fucked that took a shot at him, as everybody now knows that he's got his mugshot right outside the White House Oval Office because he is out to scorch the earth. It is going to make the country better, but there are a number of people, indices, or, not indexes, but businesses, groups, entities, they're going to get fucking destroyed. And that is going to bring some pain onto the stock market when it takes place. And like what I had in front of my college when I walked in is, it had said there in Latin, if you want to make omelets, you got to break some eggs. And we're in the egg breaking stage of everything right now. And that leaves me with Bitcoin. And A lot of people sitting there talking about this big breakout that's going to come in Bitcoin and how it's going to go so much fucking higher. Well, I want to bring you back to the original Bitcoin, okay? The original Bitcoin. And that's right here. This is the original Bitcoin. It's called gold. That's the original Bitcoin. And the original Bitcoin is not saying, hey, guess what? You should go buy Bitcoin. So look at Bitcoin from whatever view you want to look at it, from the bullshit that you read all over the internet. But because Thinkorswim only goes back to, where is this, 2020, when they put their Bitcoin chart up, the Bitcoin chart is not complete on Thinkorswim. You need to go somewhere else and source it to get to the origination back when it was down below $100. But what you'll see when you go through there is your move up here to the 65,000 area in 2018, 2021. That was your wave 3. You had your major correction, your A, B, C, almost perfect 100 extension C equals A to the downside, down to 4,000, 14,000 after that 4,000 drop. And this is your wave 5. I don't care what you say, it's your wave 5. And you have had your perfect 1, 2, 3, 4, 5. So if you want to hold on to your Bitcoin because you think it's going to 110, 125,000, I wish you the greatest of luck. Because unfortunately, when you break down below 74,000 is when you're going to realize you're fucked again, just like before, and now you need to hold it for another 8 years before you can get back up to 100,000 and get out of it again. But in 8 years' time, you're too fucking old to give a shit because everything costs 30% more than what it costs today. So anyway, gold is making a major, major move. Silver, same thing. The dollar, the bond market. So when you want to come back onto the U.S. exchange and you want to go over there and you want to look at the SPX and say, you know what? I like the low odds. I like the low odds, and I like that we're going to go another 120 points higher. Do I give a shit about everything to the downside? Absolutely not, because nothing's going to ever happen to the downside. People have talked about the downside for so long, it's never, ever going to come. Well, like on Valentine's Day, whether you're beautiful or you're ugly, your gap is going to get filled. And all of these gaps, having gone back with, again, 500 and how many is it? Where are you? There you are. 586 trading sessions since your last minus 20% correction. 325 trading sessions since your last minus 10% correction, which is way down here in October 2023. All of these gaps are going to be filled. Have a great weekend. Enjoy yourselves. And I will see you in the chat room on Tuesday.
A lot of you were on the fucking Zoom and you were doing the following, okay? Looking at your mail, sending texts to each other about what an asshole the other person is. Okay, not paying attention, not reading your stuff, and if you don't think that slows down efficiency, creativity, creates rudeness and stuff, it does, okay? And when I found out that people are doing that, you don't do that in my goddamn meetings. You go to a meeting with me, you got my attention, you got my focus, I don't bring my goddamn phone, I'm not sending texts to people, okay? It simply doesn't work, and it doesn't work for creativity, it slows down decision making. And don't give me the shit that work from home Friday works. I call a lot of people on Friday. They're not a goddamn person to get a hold of. But here are the problems, okay? And they are substantial, okay? Which is the young generation is being damaged by this. That means they may or may not be in your particular staff, but they are being left behind. They're being left behind socially, ideas, meeting people. In fact, my guess is most of you live in communities a hell of a lot less diverse than this room. Every area should be looking to be 10% more efficient. If I was ready to depart with 100 people, I guarantee you, if I wanted to, I could run it with 90 and be more efficient. I guarantee you, I could do it in my sleep. And the notion, these bureaucracies, I need more people, I can't get it done. No, because you're filling out requests that don't need to be done. Your people are going to meetings they don't need to go to. Someone told me to approve some of his wealth management that they had to go to 14 committees. I am dying to get the name of the 14 committees. And I feel like firing 14 chairmen of committees. I can't stand it anymore. Now, you have a choice. You don't have to work at JP Morgan. So the people of you who don't want to work at the company, that's fine with me. I'm not mad at you. Don't be mad at me. It's a free country. You can walk with your feet, but this company is going to set our own standards and do it our own way. And I've had it with this kind of stuff. And, I come in, I've been working 7 days a goddamn week since COVID. And I come in and where's everybody else? But they're here and there and the Zooms don't show up. And people say they didn't get stuff. So that's not how you run a great company. We didn't build this great company by doing that, by doing the same semi-disease shit that everybody else does.